Good afternoon, everyone. Thank you for joining. We'll just give it a few more minutes as I see more people joining in the webinar. Just a few minutes before we start. All right. Why don't we start? Good afternoon, everyone. Thank you for joining. Thank you for taking out the time. Uh, Today, my name is Samir Bhandari. I'm the co-founder and CFO of hBits. Just as a background, I'm a chartered accountant by training, and then I did my MBA from IIM Ahmedabad. I was in banking for close to 34 years. After I left banking, I joined hBits, and I have been with hBits for the past 2 years or so. Uh, and this today's, I guess, investment protocols for maximum portfolio gains. It's one of the webinar series which we plan to do also on a regular basis. And the objective really is to add value to investors, give them my view. I've been investing in the markets for the past, I would say, 30 years or so, and just basically discuss a few things, right? What we feel is going to happen under Modi 3.0, and then have views, have Q&A, to make sure that the portfolio gains are maximized. Uh, the way we're going to do it is I'll give you a high level view around some of the sectors which I think will do extremely well under Modi. Given that this is his third term, obviously he wants to leave a very, very strong legacy for the country. And I think he'll do some, yeah, I think he'll make some radical changes around investments in India. I'm also very excited because I think India is doing, firstly, it's doing amazingly well. I mean, we've seen in the last 5 to 8 years how progressive India has become, and the progress we have made in the international arena, I would say. Every country respects us. Every country takes us very, very seriously, and I think we're just on the cusp of greatness, as we say. Um, and I do feel this 5 years is going to create a lot of wealth for Indians. I mean, in the last 3 years, I guess post COVID, obviously a lot of wealth has been created, but I do feel the wealth which can be created in the next 5 years could be actually multiples of what we've actually created so far. So, without further ado, why don't we start looking at the sectors which I personally feel will do very well under the Modi government for the next 5 years. Ramanand, can we go to the next slide? So, firstly, very, very important, you have to have a solid infrastructure portfolio. And in fact, I don't know how many people attended, but in my last webinar also, I mentioned this is going to be the bedrock of everything. And I think the government is going to continue to spend a lot. If you see, if you had been invested in infrastructure, I mean, your portfolio should have done extremely well over the last 4 to 5 years. And I think that actually continues to do that. And some of the sectors under infrastructure which you could look at, I'll just show you in the next slide. Next slide, please. So if you look at the top subsectors which you could look at: highways, railways, water supply, cooking oil, real estate, electricity, all these sectors should continue to do well. The government will emphasize these sectors, they will continue to invest. So, whether it's engineering, whether it's construction, whether it's real estate, whether it's utilities, whether it's infrastructure, everything will actually do well. And I think, and as I mentioned earlier, I think it's going to actually accelerate, given the fact that this is probably Modi's last term as prime minister. So he will want to leave a very, very strong impact on the overall economy in India. And one of the I guess one of the issues India has had in the past has been poor infrastructure. And this government, I think, has done an amazing job in making sure that building on that, because obviously it helps the overall economy. So these are the some of the subsectors you should be looking at, and you could do it through stocks, you could do it through mutual funds, could do it through ETFs, or you could be buying real estate in some of the cities where the growth is expected to happen. Next slide, please. Second sector, which I think is extremely important, and we have seen a lot of growth, is digital transformation. We have seen companies like Zomato, companies like India InfoEdge investing in this whole digital transformation. And I think this is again only going to accelerate. I mean, what you've seen in the last 5 to 7 years, just make that 2 or 3 times. And that's the kind of digital transformation which is going to happen. And I think what's also happened is the consumer or the person on the street has started using mobile phones. So obviously, the education around the whole digital part is also accelerating. So this definitely, I think, is going to accelerate. And definitely, you should have as part of your portfolio names which actually help in digital transformation. And we'll talk about it in the next slide. Next slide, please. So this is again just talks a bit about growth. It was inception date was 2015 when we first started, and look at what all we've achieved. We started with the Aadhaar card, the Digi Yatra, and a lot of other things which the government has continued to do and will continue to build on. Next slide, please. The budget expectations, obviously, everyone knows that internet connectivity is extremely important for the government. Infrastructure is extremely important, especially around the digital space. There's a lot of support coming for tech startups. I mean, the government is actually giving grants for tech startups, and they are encouraging. I mean, India is becoming a massive tech hub. So I think that will continue. Support for innovation, support for cyber investment in cyber security measures. So all these things are actually going to again accelerate digital transformation. So we've actually seen nothing yet. I think the next 5 years, you will again see explosive growth here. Next slide, please. And these are some of the subsectors you could invest in: IT, fintech, digital service providers, some of the tech startups which have been listed, some may be unlisted, cybersecurity, which I think is extremely important, and digital hardware. Again, this you could do through direct investment in stocks. You could do it through mutual funds, ETFs, or if you do a lot of study, then you could also look at some of the private companies and look at angel investments around this space. But this space is here to stay. This space is here to grow exponentially, and the government support in this sector is going to continue to increase. Next slide, please. Um, Healthcare. I mean, we all know how important healthcare is. Uh, and I mean, if you see the US, Obamacare actually transformed healthcare in the US, which allowed healthcare to the common man, which was a big problem in the US, given that healthcare was so expensive. The government in India obviously wants to make sure that healthcare is easily available to the common man, and I think they will continue to invest in it, whether it's through hospitals, whether it's through cheaper medication. These kinds of investments will continue to happen. And i guess and i guess the common man is also now giving a lot more importance to healthcare. He or she are giving more importance to wellness. So definitely this is one of the key sectors one should definitely look at for inputting money from your portfolio. Next slide, please. This again just gives you more details around the healthcare initiative which the government has had. I'm obviously going to be sharing these slides with everyone, so it's you don't need to really take notes around it. But again, given again the focus around healthcare, I do feel this sector will and continue to remain very, very important. Next slide, please. This again talks more about healthcare and where you should be investing. I do think you should be investing in hospital chains, technology companies which help in healthcare. You should be investing in medical equipment. You should be you could also invest in broader pharma companies. So all these companies you could actually invest in and make a robust portfolio. Next slide, please. So this is I think, globally sustainable environment and growth portfolio by investing in green energy. This is actually very, very important. Everywhere you go, people talk about sustainable environment. People talk about green environment, and I think the government will continue to focus on it, will continue to invest in it, whether it's solar energy, whether it's renewable energy. These are again some of the sectors where a lot of investment will go. Modi ji had mentioned that solar is extremely important, and he wants to give electricity to every household. And I think solar and renewable energy are going to be key for what he would like to achieve. Next slide, please. This again just talks about some of the areas which you could actually look at. Again, it could be green energy, it could be solar, and you could invest through various ways. Again, you could be investing through stocks, direct stocks, green bonds, mutual funds. There are a lot of companies in this sector which are doing extremely well, and definitely you could build either your own portfolio or through mutual funds. Next slide, please. uh, Agriculture is the backbone of India. A lot of people, as we all know, work in this sector. 15 to 20% of the GDP is through agriculture. So this will always remain one of the most important sectors for the government. And to help the poor get out of poverty, I think the government will continue to invest here. So there are a lot of investments around the agriculture space, which you could look at to invest to build again a great robust portfolio. Next slide, please. We spoke about this. 15 to 20% of the Indian GDP is through agriculture. There will be enhanced subsidies. And a lot of people say that subsidies should not be given, but to get people out of poverty, you have to definitely support them. And I think it's very, very important. I think the government will also spend a lot of money in rural infrastructure. Uh, City infrastructure, of course, it's spending, but I think rural infrastructure spend again becomes very, very important. Development programs for employment, I think increasing rural employment, making sure that they are getting trained well to work well in those sectors, I think is very, very important, and it's imperative. And I'm fairly certain that the government will continue to invest around this space. Next slide, please. This again talks about uh, where you could invest in agriculture. You could invest in fertilizer, farm machinery, agribusiness, agrochemicals, textiles. These are some of the percentages. They are not sacrosanct, but you can look at, if you were to invest in agri, suppose you had 100 rupees to invest, some of the sectors which you could look at in agri. I mean, you can change the percentages, of course. This is what I thought would be good and relevant for investments. Next slide, please. The consumer goods and retail story. I mean, we are a 1.4 billion population. Uh, People are getting wealthier. People are spending a lot on consumer. The retail person is becoming more and more sophisticated. So this story again will grow exponentially, and you have to be in, as your portfolio, you have to be in this sector to actually get gains. And the government will continue to push this sector to help the common person on the ground. Next slide, please. Uh, Again, for mounting consumption, um, all this is happening, right? I mean, there's a rise in socioeconomic status. We spoke about digital penetration. That's definitely gone up a lot. Uh, a desire for a better lifestyle. Who doesn't want a better lifestyle? And for that you have to spend, and especially, and hence I feel consumerism in India again will grow exponentially. So you have to be in this sector. Plus we are seeing rising disposable incomes, right? Whether it's the wealth effect through the stock market or otherwise, the disposable income of the common man is definitely increasing. So that will also help consumerism quite a bit. Next slide, please. This again talks about different areas you could look at. You could look at e-commerce, you could look at FMCG, you could look at some of the mutual funds which combine these two. So all these sectors uh, in consumer alone, you should be looking at. Next slide, please. But I think it's important uh, we approach with cautious optimism. And the reason I say that, equity markets have run up quite a bit. It's happened in the US, it's happened in India. And having a balanced portfolio always helps, I feel. And I'm going to be suggesting the kind of balanced portfolio which I would suggest to people. But I think it's just important that you don't get carried away by the markets. People do burn their fingers, and it's not to say that it cannot happen, because given that the markets have run up by 10, 12, 15%, and some of the stocks are up, I mean, more than 50% or 70%, especially that on the mid cap space, you've got to be very, very careful. And I personally do think there could be a pullback in Indian equity before it starts going up again. But having said that, I think the story is amazing for the next 5 years. I mean, you can only be bullish if you have a long term view of 4 to 5 years. And I think your wealth could actually multiply if you are invested in the right sectors. Next slide, please. So, based on the markets today, this is my recommendation for people. Stocks, equities is around 40%. Bond and debt mutual funds around 25%. And this would include some in liquid funds, or say some in arbitrage funds, because I do feel the market will correct and you may use this cash then to actually invest in equity. Commodities, reasonably bullish around the commodity space, especially precious metals. I do feel gold and silver could actually go up 20 to 25% in the next 6 months to 1 year. So, definitely having an allocation around commodities helps. Commercial real estate, having been in commercial real estate, seeing how commercial real estate is doing, we do expect returns of anything between 15 to 17% in commercial real estate, if you are able to hold it for 3 to 5 years. So definitely a certain kind of allocation around commercial real estate helps. Allocation in residential, I would not say that unless you want to stay in that house. Allocation to vacation homes does not make sense unless you want to actually use it, because otherwise the returns are really not there. And hence I've said commercial real estate. Next slide, please. So, just in summary, as we discussed, 6 sectors which you can look at and which you should look at: healthcare, digital transformation, renewable energy, infrastructure, agri. If you can create a portfolio around these sectors, I'm reasonably confident that you will actually be beating the market returns. Next slide, please. So thank you so much. I want to keep it short, uh, and we'll now open it for Q&A. Or if you have any views around what I've said, happy to learn from you. But let's open it up for Q&A for the next 20 minutes or so. So Manish has asked a question about capital goods. Very, very bullish. Again, it's the whole infrastructure story. It's all the investment story. So Manish, I'm again extremely bullish around the capital good is what you mentioned. Your views around EV power sector definitely again very bullish. EV is also, I'm actually reasonably bullish. I think what we'll have to build around EVs is the infrastructure around the EVs, whether it's the batteries, whether it's the charging stations. And in the US, there's been a bit of slowdown around EVs because of the infrastructure around it. But if I were to say longer term, given sustainability and how the government is focused on green energy, definitely reasonably bullish on EVs. What about consumer and white goods? Question from Arun. Absolutely very bullish. Again, it's the whole consumerism story, right? Wealth is being created. People want better lives. People want to invest in themselves. And whether it's consumer, whether it's travel, whether it's leisure, definitely they will be spending a lot more. So, to answer your question, Arun, very, very bullish around the consumer story. Vinay, what is your view around defense? Again, Vinay, given the uncertainties around the world, every government is actually spending on defense. So the spend from the governments will definitely be there. Though I have to say the defense sector has run up quite a bit. But longer term, if you're willing to hold, again, quite bullish around this sector. Question from Ritesh. These sectors comprise a lot of stocks. Wouldn't it be better to invest in a multi-cap fund that encompass all of these sectors plus large, small? That's Ritesh, one way of investing. Alternatively, you could be investing in different ETFs a lot of these sectors have ETFs, or a lot of the funds may be specialized in some of these sectors. I would go more for specialization, because some of these multi-cap funds, a lot of times, they may invest in certain names which may not give you the same kind of returns. So yes, one of the alternatives is this, but I would say if you can go sector specific, whether it's ETFs or funds, my guess is that would give you better returns. Question: are you making small ticket investment in CRE areas that you highlighted? I mean, 10 lakhs, yes. The answer is yes. We are taking investments of 10 lakhs. In fact, SEBI is also encouraging, in the new SM REIT regulation, which is coming, the minimum ticket size is 10 lakhs. Question from Gautam: semiconductors, chip, and its packaging. I mean, you know the AI story, Gautam. I mean, it's taken the world by storm. Uh, Definitely, India also is going to benefit as a lot of chip manufacturing starts to build up. Semiconductor globally, I'm actually very, very bullish. And so I guess, on that note, I'm also very bullish around in India. Question from Karthik: hi, are REITs a good instrument to invest in commercial real estate? And is there any methodology for valuation comparing quotes on NSE versus intrinsic versus fair value? Uh, REITs, I think, is a good instrument. Unfortunately, in India, REITs have not really performed. Few reasons for that. One is, it's a very captive. So typically, there are two or three large developers who have their own REITs. So Raheja has its own REITs, and a lot of whatever they build, they actually put it into REITs and then list it. So there is sometimes a conflict of interest around there. Uh, Plus, I think 20% of their investments are under construction, so valuation may be not as accurate. And that's one of the reasons why REITs in India have not performed. Overseas, I think the valuations are a lot more accurate, but overseas REITs have not performed because interest rates have gone up a lot, and all these REITs are typically leveraged. In the US, leverage is 50%. In India, the leverage is 40 to 50%. And as rates have gone up, that's obviously hurt the REITs. But as rates start coming down, these REITs definitely will perform. The question by Parag Patel: which sectors are likely to correct overpriced sectors? I mean, there are a lot of. I mean, I was looking at the price earning multiple of some of the companies, and a lot of the mid cap companies, I think I think they're trading at crazy multiples. So you've got to be very, very careful around where the multiples are trading. Sectors also like the PSU have gone up quite a lot. Defense has gone up quite a lot. So overall, though I'm very bullish on these sectors, the corrections in the markets, Parag, could definitely happen, right? I mean, when things go up by 20, 30, 40%, I mean, there's no reason why it cannot correct by 15, 20%. And case in point being, I mean, if you see Nvidia in the US, it's gone up a lot, but when it corrects, it can correct as much as 30, 40%. So you just got to be cognizant of the fact that sectors which have gone up a lot could correct. Single stock names which have gone up a lot could correct. That doesn't mean that they are not good sectors or they are not good names. It just means that the market is taking a pause. There's rotation. Rotation happens a lot in the markets, and that's now happening in the US, where people are moving away from tech into some of the other sectors like banking, and small caps. So that could definitely happen. What's your view on financial stocks in the near term before the budget? Honestly, not too bullish on it. Longer term, I like it. I mean, like stocks like HDFC Bank, which have corrected quite a lot, I actually quite like. But I do feel they may languish for some time. Question from Praveen: what are the commercial real estate properties hotspots in India, and what services or opportunity hBits is providing in these areas? So we are right now concentrating on the six major cities, Praveen: Mumbai, Bangalore, Pune, where we've launched properties. We are looking at Gift City. We are looking at Delhi. We are looking at Hyderabad. These are some of the cities we are right now presently looking at. In terms of services or opportunities, we pretty much do from beginning to end. We invest in the property, we manage the property, we make sure the tenant leaves, we lease it back, and we actually help in selling the property also. So from day one to day 10, if day 10 is exit, we pretty much manage everything. Question from Manish: you didn't cover business cycle play. Are some of the industries now ready for uptrend? For instance, IT, believe pharma. Absolutely, absolutely, Manish. I do think IT in a way has underperformed. I do expect this cycle to pick up massively. In fact, in one of the slides on the digital transformation, we spoke about IT, and of course, pharma definitely. There's no doubt about it that I'm very very bullish around this sector. Is There's a question: is 15 to 17% for commercial real estate that you mentioned is annually over next 4 to 5 years, and including or excluding the rental income? Firstly, it includes the rental income. Rental income, we are looking at 8 to 9%, and the rest of the income which will come is because of capital appreciation. And why does capital appreciation really happen? Because we have 5% typically every year. The rental grows by 5%, and if you've taken the property in the right micro market, you can expect anything between 6 and 7% annual appreciation. So a lot of the appreciation will come at the end of 4 to 5 years, and you will get rental income of 8 to 9%. So yes, it does include the rental income. So question from Ravi: why commercial real estate only 20% allocation? Why not more? It's all a question of Ravi, asset allocation, right? So stocks, why I say more is because you within stocks you can allocate within different sectors. So even if it's 40 or 45%, allocation of each sector could be 10% or 5%. Allocating a lot more, I always feel is uh, not dangerous. I would say it's not prudent risk management, and that's one of the reasons I've put only 20%. Question from Sandeep: investment in the macro level seems to be great, as you have suggested. What do you think of tier two cities and tier three cities specific to CRE? Sandeep, I think that's going to grow. Uh, the question there is, the tenants in these cities. Do you get global tenants? Are you getting tenants which are AAA in nature? As long as you get those, because the buildings, definitely quality of buildings has improved a lot. So that's definitely there. As long as you get great tenants, that will also grow. And I think it's a matter of time. I'll be very honest. In 2 to 3 years, 4 years, I think the tier two, tier three cities will probably become as important as the tier one cities. Vinod, view on infrastructure real estate: very bullish on infra. As I mentioned, real estate, residential, not bullish. It's gone up a lot. As I said, vacation homes, not bullish. They've run up quite a bit. Commercial, because it's really a formula. You get, if you have the right property, if you have the right tenant, you will get 15, 16%. So bullish around commercial real estate. Plus, I'm also seeing a lot of foreigners coming into India. So they want real estate, commercial space. So really reasonably bullish around commercial real estate, very bullish around data centers, reasonably bullish around the warehousing space. Question from Swapnil. Interested in commercial real using fractional, but lack of exit options are holding investors back. Any thought? Uh, so, Swapnil, firstly, with the SM REIT coming, all the units are going to be listed on the stock exchange. So, exit is going to become much, much better. I also feel that liquidity is definitely improving. I'll be very honest. I personally wanted to exit after 6 months, needed the money. We were able to exit in 15 days. In fact, 10 days we exited. I got my money within 15 days. So definitely liquidity is improving. But is it as good as the stock market today? No. Is it as good as the mutual fund industry? No. But definitely it's going in the right direction. Question from Balaji. Are there any upcoming commercial properties going to list in hBits? We presently have one listed in Pune, which is 90% subscribed. We plan to list one or two properties in Mumbai and Bangalore very, very soon after this. Question from Gautam. Is HBS planning any investments outside India? Yes, Gautam, we are. Not immediately. We want to reach a certain AUM in India before we launch properties outside. Question from Raju. How is commercial fraction real estate work with new regulations? Does it have any impact on returns? I don't really see any impact on returns, Raju. It's going to be a more stringent process because SEBI is going to be the regulator. Uh, and we are working with SEBI very, very closely, making sure that the SM REIT becomes very, very successful. Because SEBI is very, very keen to grow this SM REIT. So I don't really see any impact on returns as such. But given that it's regulated now, it definitely helps more and more investors and gives them a lot more confidence. What is your view around Gift City emerging as a global fintech hub? do you have to have a Do you have plans to have an asset on your hbits? I think Gift City is emerging as a global fintech hub. It will take a bit of time, let's be honest, but definitely it's happening. We in hbits are actually evaluating a project in Gift City. So if that ticks all the boxes, we might actually launch that. Is there a possibility to share the slide on potential sector? Once again missed on catching. Thanking you in advance. I think it was the last slide. Sure, and we'll be sending the full presentation to everyone. Anyway, but Ramanand, could you just put that last slide on, which is on all the sectors? Yeah, I hope you can see this. Questions from Gotham. NBFCs. Sorry, let me just see where NBFCs are performing better than banking, exact HDFC. What happens is the banks are very highly regulated, and because of that, and HDFC specifically, as you know, it merged with the parent company. So I think it's coming out of it slowly. I'm Over time, I think HDFC will do extremely well. But right now, it's and because of the management change which happened with the CEO changing, it's actually underperformed a lot. But if you compare it to say ICICI Bank or Axis, the banks have actually done reasonably well. Can you specify a few tier 2 and tier 3 cities in India? I honestly think cities like Indore, maybe cities even like Bhubaneswar, could do well. Jaipur is again a city which a lot of investors have been looking at. Definitely, I think the tier 2 and tier 3 cities will expand. Uh, but I think given the fact that a lot of the tenants are mainly in the major cities, unless the tenants are able to move, especially the global tenants and the larger tenants into these tier 2 tier 3 cities, I think they'll take a bit of time. So for example, Ahmedabad, I think, will be another city which will see growth. But I think give it a couple of years and then you might see that. Thank you, Manish, for the thumbs up. Question from Nandan: do you see US slipping into recession in coming quarters? Nandan, absolutely not. I think they're going in for a soft landing. I think inflation is now under control. I do feel US will actually do extremely, extremely well. The only uncertainty is obviously around the election in November, but otherwise, I'm very, very bullish around the US. There's a question from Karthik. In today's ET, there's a talk on GST becoming applicable on management fee for AIFs. Will this bring down returns for stock portfolio, commercial real estate pooled investment? I guess it's only speculation, I guess, Karthik. But yeah, if it does get implemented, then yes, to some extent, it could bring down returns. But given the fact that right now it's speculation, let's hold off and see how it actually pans out. Question from Amol: how is liquidity taken care in case any client wants to exit after 2 years in SM REIT in case of emergency? We have bid offers in the Amol, which we'll be giving in the on the exchange. Uh, hBits will also help in providing liquidity. Plus, we have a lot of people on our platform who are constantly looking to buy into it. So definitely, my guess is liquidity will not be a problem going forward. Vinay, what are the yields in the warehousing space? How does it compare with commercial real estate? Vinay, yields are very low in warehousing. They've come down to close to 6%. Commercial real estate, it's still more than 7.5 to 8%. So we still like the commercial real estate space a lot more, especially given the fact that warehousing yields have just come down a lot. Question from Swapnil: as an investor, how does one know that the price is right from an investor's perspective at the entry point? I guess you're talking about commercial real estate. I guess, Swapnil, that's what you rely on people like us for, because we don't only look at entry, we are actually looking at exit. We want to make sure that we exit at the right price so that you can get that 15 to 17% return. Of course, you can do your due diligence, but I can tell you we are very, very careful in which properties we actually buy. Thank you, Manas, for attending. We on Resi in Bangalore. Resi, I'll be very honest, it's gone up a lot. And unless you are looking to stay there, please, that's obviously, I think you can buy. Otherwise, honestly, don't. In fact, I have property in Bangalore in Epsilon. Yes, it has gone up, but I've held it for 9 years or 10 years. And honestly, the returns have not been that good. So my suggestion is don't go for it. Question: Swapnil, in CRE as an investor, how does one know that the price is right from an investor? I've already answered that. Which city out of Mumbai, Bangalore, and Pune would give better returns for commercial REITs? my my guess is Mumbai will always be very, very good. Mumbai and Bangalore. Uh, if I were to rank them, I would say Mumbai and Bangalore close first and second, and Pune a close third. But all these will actually do extremely well, and which is why we are also concentrating a lot on these cities. Like for example, Delhi, NCR, we are not that bullish around that space there. Question from KN Kumar: I'm new to fractional ownership. Who do you compare yourself with market leader like PropShare and Strata? What are the risk mitigation steps you have taken? Yes, so there are three major players. I would say PropShare, Strata, and us. What we pride in is our acquisition strategy. We are not very aggressive. We make sure that we identify the right property. We make sure that the micro market is good, and it's not about entry. It's actually about exit. When you exit at the IRR you have promised. Obviously, the due diligence which is done by Shardul Amarchand Mangaldas. Our partners are Deloitte, who do the structuring. Our bankers are ICICI Bank. So we make sure that we partner with the right people and make sure that we give very good returns to our investors or potential investors. Gautam, any strategic plan of hBits to file for IPO? Gautam, I think in 2 to 3 years we will be looking at an IPO. Definitely. Ashish, Nifty 50 to 60K by 2029, India 5 trillion. Do you think any war, recession, action, or news will hamper the growth? Personally, I don't think so. I'm very, very bullish on India. Of course, you can never predict what will happen in the political scenario globally. But given that India is such a large domestic economy, also, I'm actually very, very bullish. To answer your question, yes. The answer is yes. Question from Dheeraj. Have you given any exit yet? What was the IRR? Yes, Dheeraj, we've given one exit. The IRR, if I'm not mistaken, was 18.06% pre-fees, and it was 17 and a half, 17.54 post-fees. Gautam, what role does JLL and PwC play? They are more, JLL is our valuation partner, and PwC is more for structuring, making sure that the structuring of the SPVs is done well. Question from Swapnil. In CRE, how many exits have you made? As I mentioned, we made one exit. Would you be able to share the rate of return? It was 18.06, if I'm not mistaken. Pre-fees, post-fees was 17.54. Uh, what is the time frame from start to exit? In the earlier case, we exited them in 18 months because the returns were very good. Typically, we take anything between 3 and 5 years uh, when we exit. Given that you get indexation right now on capital gain, the tax is actually very, very low. Right now, it's 20% tax on capital gains, but after indexation, the taxation is extremely low. Any more questions? That was the last question on my sheet. If there are any more questions, please feel free. Gautam, thank you, sir. Thank you, Gautam. Thank you so much. So if there are no more questions, thank you so much for attending. Thank you for taking time out. And we hope that we will continue to add. Sorry, there's one more question. Sorry about that. Is it worth to invest in physical real estate? Uh, the problem is when you're looking at physical real estate, you have to firstly, if you're not going through hBits or someone else, you've got to actually manage the real estate yourself. And typically, commercial real estate, you will not be able to invest 10 lakhs, 15 lakhs, 20 lakhs. You'll have to invest a much larger amount. So the risk is obviously more. And we do feel that the experts, when they manage properties, they do it a lot better than people. So my suggestion is don't do that. But of course, I leave it to you. So thank you so much again for attending, and thank you for your precious time. Looking forward to more such sessions with you guys. Thank you. Thank you.